USD JPY. Oh, I have these key levels already. I'll just delete them. Okay, so for time being, you'll have, if you don't trade this pair, you'll have a blank chart on it. No issue. First thing you need to do, go to a day one chart or the H4, zoom out as much as you can. Not a lot, you need to see the chart as well. Okay, so and identify where the price is trying to break but cannot break, keeps coming down, break, cannot break, keeps coming down. This is a good zone. Make a line here. Yep, and I'll make a line here as well, and make a line here as well, and you could make a line here if you want to, but okay, fine, I'll make a line here, but that's not where the market is, and it does not help me in any way. Once you're done making the key levels, you shouldn't have more than like 4 or 5 key levels, because I can have key levels going here, or you can zoom out here, but it's no use. You need to keep your charts clean. Don't have many key levels. Just have where the market could range the coming week. Once you're done with the key levels, go to the H1. Okay, zoom in and make those boxes again. You just keep repeating these processes. You can adjust your key levels as well and keep it on the body. Make this box from the body to the wick, and do the same here also, from the body to the wick. Now this pair has been consolidating a lot. I don't think I can show you. Oh, I can. Yep. We can take the lowest low and make a box here. Made a box. Make a box here. Zoom in and see. You'll see this. You made this box here on the lowest low. Market touched this, went up. Now, when the market went up, let's say I have a box as well over here. We can take this. This is not the highest high. We can take this box. Market was consolidating in these two boxes, and what do? We wait for the price to break. Now, waiting for the price to break, we made this box here. It came to this box, went up almost to this box, but it did not. No worries, we are waiting for a breakout. Came back, broke this. We are waiting for a retest. Here is the retest, and then we'll enter the trade here, have our stop loss above the key point. Okay, because we already have a break, the retest. Don't think that this strategy will not give you drawdowns. There is no strategy that doesn't give you drawdowns, but it will give you the least number of drawdowns. If it's in drawdown, know that you're trading it wrong. If it's in a drawdown for, like, let's say, when you're trading it on this, it's 11 here, I mean, yeah, 11 here, and it's in the drawdown for more than 6 or 7 hours. If you're not trading intraday, you're trading swing, know that you're doing it wrong, and there is a potential that your stop loss is going to get hit. We have break retest. We are in this from here. Let's take a short position. Our stop loss is just above this. We are in a drawdown here for how many hours? 1, 2, 3, and the market falls. We'll have the TP, let's say 50 pips. 50 pips is fine, I think. How many pips? 20, so we'll say 40, because 1 to 2 risk ratio is more than enough. If you're trading long, what do you call, let's say, your take profit should always be double your stop loss. Now here it's 19.3 and I'm assuming it has 20. My take profit is 40. So we were in the drawdown for 1 to 3 hours, and the market broke down and came back, and after 30 pips we'll adjust the stop loss to the entry. So if the price is coming back, it's probably going to go and change directions, but we have our stop loss in profits or break even. So this trade would have been close break even if the market returned, but it did not. It hit TP. These are very important boxes. Once you make these key levels, always remember to make these boxes, because if you don't make these boxes, you're going to get trapped when the price breaks this key level. Let me find one more. Let's go up. Price always moves from one key level to another key level. Yep, here we have another one. We'll go back, look at this, make a box from this low, from the body to the candle, from the body to the wick. Made it here. We were waiting for the price to break, and it was in a good support from this area to this area. It was in a good support and resistance zone, but once it broke, came back, test this box, and this trade did not have any drawdown. But keep in mind, guys, that you never always win. There will be some points where you get trapped in a fake breakout or fake, what do you call it? You make your support and resistance wrong, but the more you try, the better it gets. Now if this was the same trade for, let's say, we were using the sell limit order on this, and we'll keep the stop loss above the box. It is 30 pips. If it is 30 pips, means my take profit should be at least 60. So we'll keep this at 60, and in 1 2 3 4 hours our trade hit 60 pips. You can either keep your take profits and stop loss in the next zones, but that's much more complicated. If you want me guys to show that, I can show that as well, but for this video I think this is fine. 1 2 3 4, yeah, I've shown you all of them. I've shown you GBP. Yeah, keep in mind, guys, that these key levels and the boxes play different roles. These key levels are where the price keep hitting, but the the zones are for the wicks where the price have been already. Can we do one more pair? Let's see. We'll do this pair, GBP NZD. Let's go to the 1-day chart. That's the first step. Keep in mind, zoom out as much as you can to see clearly where the price is hitting again and again. This is a good one. I'll take this. We have these, and I can take this as well. And I'll take the top. I think this should be fine, and I guess I can take this. Let me zoom out a little bit. I think I can take this one because the price keeps going to the key level, bounces back up, and comes to the key level. Yeah, I think 4 is enough. And now the next step, I'll go to the H1, zoom in my charts. When you are zoomed in, make those boxes. Now this is a box. I'll move this box a little bit up. No, I don't want to do that. Now this is a potential trade which you could trade, but on Mondays the market usually opens with gaps, so I don't know if it's going to go down or up. But yeah, you could trade this, keeping your stop loss above this level and take profit I would suggest double the stop loss. Now you have made this one box, go again and try finding another box area like this one, boxed up area. Now those traders who do not have these boxes thought that this price broke and retested this key level, but you and I both know that these boxes are where the price have been, and we would not have entered this trade unless the box was broken. But this box was never broken. It keep hitting this box and went down. You could I mean you can find these key levels, but those boxes, again and again I keep telling, don't forget these boxes or you will lose the trades. This box I can take it from here all the way here. Now look what happened. Now this is a good trade. See, came, broke this box, retested it, we would have entered here, our stop loss would have been just above this key level. Now this market was in profit. How many pips is this? From our entry till here, it's 50 pips. It would have hit TP if our take profit was 50 pips, but let's say it wasn't. But when it was 30 pips in profit, we would have entered this trade. I mean, we would have moved stop loss to break even, and this would have hit our break even. But no worries, we can still use the same box again. The box broke again, came back, I retested it again, it fell. And if I stretch this box again, it keeps doing the same thing again and again and again. But once you see these candles forming on the box, know that the box is no longer effective, that much effective, because you need to have less candles in your box and more wicks, which will make your support or resistance stronger. Once you have many candles in your boxes, know that the what do you call, the support and resistance are getting weaker, and you can change these boxes. I think that's enough for this one. If you have any questions, you can leave it in the comments below and I'll make sure I answer it in the next video.